Mark Twain once said that, history doesn't repeat itself, but it often rhymes. How does this quote relate to investing? Stick around and find out how one Wall Street bet's due diligence and a multi-billionaire trader are helping me position for the possible market crash in the near future. The stock market is really a fascinating place to look into the behavior of human beings. Although individuals can sometimes be hard to predict, humans in general always exhibit repeated pattern of behaviors that are easy to predict. When it comes to finance, most people will always seek the fastest path to riches. At the same time, the same people will try to do everything they can to avoid the pain of losing money. This creates the never-ending pattern of investing behavior that leads to the ebbs and flow of the market. The Elliott wave theory was created by Ralph Elliott back in the 1930s to explain how crowd behavior in the financial markets can be explained by specific repeatable price patterns. In fact, the whole idea of technical analysis in the trading world essentially exists on the belief that human behaviors, and largely algo behaviors, are mostly predictable by past patterns. One famous trader who took this belief and turned into a massive profit for his hedge fund is the legendary Paul Tudor Jones. In the late 80s, after the market crash of '87, a documentary was made about how Jones was able to profit off the crash. In the movie, he and his colleagues looked at price behavior during the 1929 crash and used the Elliott wave theory to predict similar crash was going to happen in 1987. He was able to identify a high correlation between price charts in the late 1929 with the price patterns of the 1980s. After the crash, Jones walked away with a profit of $100 million. This story was also written in the book, Market Wizards by Jack Schwager. When it comes to performing due diligence on a stock, there are many resources that people may refer to. You may get your information from financial sites like Seeking Alpha or MarketWatch, YouTube videos, and sometimes you can even find investment ideas from forums like Discord or Reddit. I believe that a lot of the information you find online simply follow the 80-20 rule. 80% of it are just garbage, and 20% of it might be useful and may warrant further research. This is no more truer than the online forum Reddit group, Wall Street Bets. Sure, most of the information you read on Wall Street Bets are just for entertainment value, but if you actually peruse the group long enough, you may actually find a few members who put up useful information on different stocks. One famous example of this is when a member by the name of Deep F in Value provided useful financial information on GameStop that allowed retail investors to trigger one of the most volatile short squeezes in recent history. But the post that caught my eye was made by a user, THKY, that showed today's SPY chart looks awfully similar to the price chart in 2007, around the time before the financial crisis of 2008 started. So naturally, I went back and compared the two charts and found eerily similar price patterns. Taking similar action of Jones back in 1987, I decided to play this information, but with options instead. When I saw that SPY was coming off a retracement, I decided to purchase very small put options, looking for a small move back to 430. Once I took a few $100s of profit off that move, I turned around and bought calls into 465 expiring May 20th. I believe that once Russia and Ukraine cease fire, SPY will shoot back up to 465. And if SPY breaches the all-time high or close to that, I will load back on the puts to anticipate the major crash of 2022, possibly due to the Fed's interest rate increase. But all of this is just speculation. It's based on nothing but a visual comparison of the SPY chart in prior years and drawing conclusion using basic technical analysis. Unlike Jones, who put up millions behind his idea, I'm just putting a very small stake on this idea to see how this will play out the rest of 2022, or possibly into early 2023. This would definitely fall into the category of batshit crazy pile of my investment portfolio. Speaking of which, I will make a future video showcasing my whole entire investments, spanning across stocks, crypto, and even real estate. Even though I put some money in very speculative ideas such as this, I believe that the best trading and investing approach is one that is based on specific set of rules that would result in consistent profit. Whether you play the markets through fundamental or technical approach, your ability to make money long-term will depend on your ability to follow through your plan. Anyway, that's the end of this video. If you would like to know the outcome of my speculative option trades, please hit that like button and subscribe to this channel. I will post periodic updates of my SPY options, as well as sharing my investment portfolio from time to time. Later.